What's good, boys? Welcome back to a new video. And today I wanted to make a pretty special video because some of you guys asked me to explain my trading Forex strategy. Um, why should you trade maybe with mine? Obviously, it's everyone's choice. I'm not forcing you. I'm not gaining anything that you trade with mine, but I'm just, sharing information. Um, it's well suited for prop firms. Why? Because it has a small risk reward ratio. Oh shit, sorry. Small risk reward ratios. Maybe 1, 2, 3. That's the biggest you could have, and it's pretty consistent. Lands pretty consistently. So that shows that to the prop firm that you're not a gambler, and obviously that you're consistent enough to make more profits. Um, and that's what prop firms are looking, obviously, not gamblers, but serious traders. So I prepared to you here some explanation. Obviously, for me, I found that it works better with the GBP JPY. I traded with some other products, but it didn't work as well. And obviously, if you're in Europe, that helps a lot too because you want to work with the London session. Um, but yeah, here we got the Asia session highlights, the highs and the lows. This is the whole Asia session. Then you simply have to wait until it goes to above or under the higher low. All right. Until there, as you can see here, you wait until a break of structure. Here you could think that we have a break of structure, but no, we don't. Why don't we have one? Because it has to go under the body and the wick. So the body, I mean, yeah, clearly, but not the wick until this one here, right? Um, I mean, yeah, the body's here, the wick is here, and it clearly goes here. Why is it still not a break of structure? Because it does not go under the previous, also the previous candle wick. So it should have closed under, yeah, more or less under here, all right, to really be a break of structure. Um, it works better like that. I know it's a bit weird. Maybe you consider that at this point it is a break of structure, but as you can see just after it did reverse. I have some other example if you want to see. Let me look. Yeah, for example, here. That's another good one. You could think again that here it's a break of structure, right? Here. And effectively it goes under the body and the wick of this one, but it does not go under the wick of, of the leg down. It really has to go under the two. That's the two requirements to make it a break of structure, right? So that that would have been a break of structure. Obviously, it's a liquidity sweeper, or maybe this one. You know, it goes under the leg here and under this one, under the previous low. All right. So that is the first thing the first error to not do. It really works better if I explain, if I explain just before. Here is an example of, well, as I said, a break of structure and a perfect trade. A good, well, not a perfect trade, but a good trade. So it has well gone above here. Boom, 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 boom. It goes under here. Boom, break of structure. As soon as we got the break of structure, that's enough for me. You can enter. You enter. If you see a clear break of structure, as I explained earlier, and a liquidity sweep, you enter. Mostly it works. And here, boom, you enter, goes down, reverse a bit, continues another break. I mean, continuation of the trend. When you have a continuation of the trend, you just simply lower the stop loss until um, with giving a bit of buffer zone, but you lower it down to secure a bit, to risk less, obviously. Um, and then, well, here they are continuation, but they're not as clear. So you'll just wait until it hits TP. An example of a losing trade would have been this one. For example, you have to show both sides of the story, obviously. So liquidity sweep, boom, you got it. Break of structure, boom, you got it. You should enter here. I would have entered here. It covers this one, the whole body. Yeah, boom, enter, you get fucked. Well, that happens. All right, let's show you more examples of this trade, this trading style. Now, I want to introduce another term, obviously. First, let's do the Asia session to make it clear for you. So it starts at more or less here. We don't care. We don't have to be precise. It's much important to be precise here. Oh, fuck. Well, don't worry. From there, high and low. I'll just do it with you guys. I think it's easier. It's clear. High and no, this one. Is the high, more or less. Again, just an explanation so we don't have to be extremely precise. Obviously, in the trading ERL, I would be more accurate on this. Boom. Well, here, it's not even a trade that I took, but here, literally here, that's the trade I took, but that could have been another one here. Here, put the stop loss here to give a bit of a buffer zone. Yeah. Wow, no, would not. That, yeah, I know why I didn't take it. It gives a really bad risk reward. Should have entered here because we always wait the close of the candle. All right, liquidity sweep, boom, leg down, break of structure here. But no, I would not have traded that one. So let's keep our example. Liquidity sweep, this one, and obviously this one. Boom, break of structure. As I explained it earlier, we know the drill. Where do I put my TP? Well, always, when you're counter trending, easy. You put it on the order block. What do I mean with that? Like the 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 resistance or a big order block. So here would be here, more or less. You can see, boom, hits reversed. Easy, bro. Literally, that's at wow, it works so well, bro. Um, Here counter trending because well, it's clearly going down. So on that case, we seek um, the order block. Yeah, as I said earlier. Let's search for an example where I'm actual trending. Uh, no, no, here. That's a good one, bro. That's another good one. So really not complicated. Not for me, it's quite simple if you follow all these rules consistently. Is it that one? Yeah, I think it is. So as you can see here, we are clearly trending to the upside, right? What do we do from there? Well, with this week, we got the liquidity sweep here from this one. You can see, no, it's not actually, well, I don't know why, but I traded that one. I traded that one, so perfect. Ended up going well for me, but it's still a good example. So yeah, break of structure here, you enter, and as you're not counter trending, you're actually trending. You seek the highs, the previous big highs, right? So could have been this one, could have been this one, but here it's better if this one, obviously. So boom, and well, flew to freaking New York. Yeah, we could show this one. Um, we will show this one too. Seems great. Here, what did we do? boom, 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 chop, chop, chopped. Break of structure right here with this red wick until this one. Break. We enter. Chop, 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 chop. I don't know if we should move our, yeah, yeah, you move it here because of those two highs, kind of works more or less. So you move it here, boom. As soon as it continues, obviously, don't wait until it goes down, right? You really have to wait until it shows, boom, it does this leg down, so you're sure that it's not going, coming back. And as you can see, it did not. Ching, here you could, but it's a bit risky. If you want, you could. So you do it here, beat up the buffer zone, and still goes and hit TP. All right. So pretty quick, pretty simple. Usually, well, not quick, but pretty simple. Oh my day, what a trade! So as you see here, it works so well, bro. It works really so well. As you see here, we have more or less an order block, a resistance, whatever you want to call it. Boom, goes under here. You enter here, and you seek, well, depending of the liquidity sweep, if it's big or not. If you see that it triggered a bunch of liquidity, maybe you can do a bigger risk reward. Here I did not risk it. I did something like that. I think maybe more because I won a bit, like here. And well, it hit TP. Yeah. Here is an example of when you have to be careful with the trailing stop loss. That's also good. We have to show everything from the strategy, obviously, when it works and when it doesn't. So enter here, more or less, boom. Trail, 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 makes a high, goes down, um, move. Let's say that the stop loss is here. Makes a high, continues. So you would move the stop loss, right? Boom, you move it here. Normally, you move it here. Then you see, oh, freak, it's reversing. Well, you would have got caught, you know? If you leave this here, you would have in TP. So that's still a thing that I'm thinking because, well, sometimes it does reverse and um, I do get stopped out when in reality it lands. Obviously, this depends on your tolerance. For me, I really don't want to see reverse. It really hurts me a lot. And I prefer to be secure. I really like to risk the less that I can and to possibly lose the less that I can. So that depends on everyone's mentality. All right, on everyone's how you work. With all that said, um, I hope it's clear for you. Um, don't don't bother to ask some questions if you have doubts. Obviously, it's the first time I try to teach something on YouTube. So tell me if I could do something better or if it's not clear enough. And yeah, like, subscribe, and follow my journey to see obviously if my strategy works. It do work, but also to see my trading journey in general. Thank you for watching, and yeah, see you on the next one. Bye.